Nobody's thinking about fundamentals in that short-term situation. They're thinking about money. Um, and I wouldn't say like I know people like to throw manipulation out there,
Mm.
that word, and I don't think it's that because I can honestly tell you most speculators lose money, not make money. Speculators will extend trends and make trends more volatile than they should have been. I will admit that 100%, but they're not interfering with the big fundamental picture. Eventually, everything comes into line.
If the content we bring you on the podcast has helped you with your business or your career and you're looking for a way to financially support the independent production of this podcast, you can do that for as little as a few dollars a month by backing us on Patreon or becoming a paid subscriber on our YouTube channel. Another way to support us and continue your learning is to purchase one of our on-demand workshops available on our website, mapitforward.coffee/workshops. Check the show notes for links, and as always, thanks for the support. Welcome to the Daily Coffee Pro by Map It Forward, friends. I'm your host, Lee Safar, and this is episode 1 of a brand new series with Carley Garner from DeCarley Trading. Carley, welcome back to the podcast for I don't know how many times you've been on the podcast now over the 8 years.
Thanks, Lee. It's good to be here. Good to be back. It's been a while since we've spoken, and a lot has happened.
Oh boy, hasn't it just? I got to tell you, I have been excited about this series for I don't know how long, since all of this chaos has been going on in the market. It is crazy. I know that you have been not just dealing with coffee, you're dealing with all the commodities. So I don't envy you. I keep very close tabs on every one of your LinkedIn posts. So I really appreciate everything that you do to keep us as informed as possible. In this series, folks, we're going to talk about tariffs and coffee prices. And I guess in this discussion, we're going to start with asking the question, what caused the coffee price volatility of 2025? Carley, what caused it? Because it's crazy.
Well, I mean, I think it's fair to say it started in 2024. Things got pretty wild late 2024. So, and that was well before, honestly, before Trump was even elected and or even on the, expected to be elected. So there's a lot of things going on under the surface before tariffs even came into play. And I'll just say this, since roughly 2020, we've had kind of an explosion in commodity markets. Each commodity market has taken its turn. So I think it was just kind of coffee's turn. They were up to bat. And here we go. And there's a lot of reasons for the volatility. I know from your perspective, you're going to have really good fundamental stories. I know absolutely those are true. And there's all these fundamental things going on. But what I can honestly say is that those type of overwhelming narratives have kind of rolled through the commodity markets, like I said, one by one, eventually getting to coffee. And a lot of them are weather related. We've had some extreme weather, so that's part of it. But I know nobody likes to hear this, but part of it is just simply the economy was shut down globally for COVID. There was a lot of money pumped into the system. It wasn't just in the US. Governments all around the world pumped money into the system. So much money, it had nowhere to go. And when you have too much money chasing too few goods, you see really crazy volatility in asset prices, and that's exactly what we got. So even there were stories, for example, crude oil went ballistic because Russia invaded Ukraine, natural gas, the same thing. So we have these stories that support why this happened, but the reality is a lot of it maybe wouldn't have been quite as volatile if there just wasn't so much money slashing around looking for a home. And when it comes to markets like, let's say, grains or softs like coffee, a lot of the money that came into those markets on the speculator side came in as hedge inflation. So, for example, if you turned on your TV in 2022, 2023, even 2024, all you hear about is inflation. And as an investor or a market participant, in the back of your head, you're thinking, well, if there's inflation, I need to hedge that inflation. And what they do to hedge their inflation is they put their money in to commodities, usually investment funds or pools, to buy crude oil, natural gas, corn, soybeans, wheat, and even coffee. We saw it in cattle as well. And so that money inflates things to prices that are probably unsustainable. And in fact, in each and every commodity, except for coffee yet, those prices have not turned out to be not sustainable. So the jury's still out on coffee. We'll talk about that later. But to answer your question, a lot of the volatility is just simply because there's too much money chasing too few assets.
When you came on the podcast last time, you helped me really understand this idea of how many speculators were in the system, well, had bought contracts comparative to history, right? Like there are more speculators that had bought contracts than had ever bought contracts before. And is that another contributing factor to what's happened with the pricing?
It is. And it was a contributing factor. When we started talking several years ago,
Yeah.
coffee was trading in the 80s and 90s, which seems unimaginable now. The conversation was the same but different. Back then, we were talking about how speculators were forcing prices down and wreaking havoc in the cash market, whereas now we're talking about them forcing prices up. So, as somebody that facilitates speculators in the markets, I also manage a lot of hedging accounts, but a lot of it's speculating. So everyone wants to, we're kind of the bad guys, but the reality is it works. Sometimes it works for people in the markets. And when I say people, I'm talking about end users, producers, even traders. These types of things are just a reality. We can't, if we didn't have speculators or market liquidity, it would be worse. I know it's hard to imagine things being worse, but I truly believe it would be. So there's going to be times where they work in our favor. Like if you're a producer, maybe these prices are helping you out, maybe not. I know there's other things going on. But if, it goes both ways is all I'm trying to say. So speculators are going to push things beyond what they should be in the short run, but in the long run, it generally we get mean reversion and it comes back to a more natural equilibrium level like we're seeing.
So the big question here is, what is driving? I want to unpack this a little bit more. This idea of what is driving the volatility. And for those who are not aware, because you don't keep your eye on the market, on the futures market every 10 minutes like some of us do, typically the range in a day in coffee was like 10 cents from the low to the high was a big deal. And right now you can have that kind of variance happening every few minutes in coffee, right?
You're right. And this is not just coffee. I know you may or may not watch the other stuff, but it's happening in a lot of markets, but coffee definitely is feeling some heat there. There's a few things that can explain part of this. So for example, when prices really started to explode, when we ran in coffee from stabilized around 330 and then one day, we all woke up and it just started taking off and it literally went from 330 to 430 in the blink of an eye. Nothing, no back and filling. So just imagine if you're a coffee buyer or if you're a trader and you're short coffee, it's a scary environment to be in. People panic. And when people panic, price gets emotional because prices are ultimately determined by people buying and selling, right? And if everybody's panicking and there's emotion controlling the people buying and selling, that you see that in the price. And that's exactly what we saw. Another thing is actually two things. So there are, like, for example, at our brokerage, we had some option trades on that took quite a bit of heat because the volatility. This is going to be kind of complicated. I'm going to try to keep it very simple. But we took some heat because the volatility of the options blew up and the market got out of control and everyone was panicking. And so, for example, we sold call options that thought were well out of the money and ended up getting into some danger. But the problem was we couldn't just expose ourselves to unlimited risk and just put our head in the sand and hope it got better. So we bought futures against it. And I can guarantee you we're not the only people that do that. So what I'm trying to say is people were buying futures to hedge their speculative bets in the option market. If somebody's a market maker or a broker that has a business, a book that has short options out there, they're being forced to buy. So when you see prices behave like that, people are buying because they have to, not because they want to. And things get out of hand, just like we saw. Margin calls also come into play there. If you can imagine, if you're short coffee, not long. Everyone assumes that speculators are making money and they must have been long coffee and got rich, but that's really not how it works because coffee behaved in a way that it hadn't behaved in 20 years. So if anybody had been doing this for a while, they would have been short, not long. So margin calls came into play. And again, we're in a situation where people were forced out of positions. So they were buying because they had to, not because they want to. Hedgers my phone was ringing off the hook by, coffee producers that suddenly, sorry, not producers, buyers that needed to hedge up, once they saw things move. So it's people behaving emotionally, not rationally. They're not looking at math. They're looking at prices, and it gets a little bit scary. One final thing I'll say is coffee futures are traded on the ICE exchange, which is different than most commodities. Most commodities trade on the CME group. The reason that matters is the ICE exchange caters to overseas traders. And I'm saying overseas, like not in the US. So their trading hours are weird. US traders kind of get the short end of the stick on those particular markets because the coffee market opens at like 3 a.m. or Eastern.
Okay.
So it's kind of a wild opening time, which spooks people a little bit. Also, most of the commodities in the US trade 24 or 23 hours a day, whereas coffee's only open for a handful of hours. And so while it's closed, everybody's panicking. So that sparks some volatility. Lastly, the ICE exchange charges an arm and a leg for live data. They charge $140 a month just to be able to see prices move in real time. To compare that, if you traded corn or soybeans, pay $2 a month for those markets, or you could pay $6 to get all of the markets on the CME live and in real time. In normal conditions, if you're looking at 10-minute delayed coffee quotes, no big deal. Who cares? But when we're seeing coffee move 5-10 cents in a couple of hours, you have to have live quotes, and most people didn't. And so that created another sense of panic. So that's the answer.
So a lot of cash is one reason. Emotion is another. Hedging is another. And unreliable data and being reactive to things.
Humans overreact. That's what we do. And then you see that in market prices. We're seeing it now in gold. Same thing. Overreaction.
And oil, if I understand it correctly.
Oil to the downside, but yes, kind of the same thing. It never fails. Humans never learn. We're always trying to do the wrong thing at the wrong time. It's just how we're built.
So the thing that we as an industry struggle with right now, everyone throughout all of this a lot of people were yelling, it's market manipulation, it's market manipulation. And of course, I was following what you're doing on LinkedIn really carefully and was asking the question myself, like, well, this, from what Carley's saying, this doesn't look like market manipulation. This looks like panic from every direction possible, and it seems like people are trying to cover their asses. How does that connect back to the fundamentals? Because that's the part that we're confused about as an industry. It's getting harder to grow coffee. None of that looks like it's changing. Why are the prices falling? What's going on?
So market prices in the long run are going to align with fundamentals. In the short run, they almost never do.
Okay.
People that are buying and selling today, especially when we're talking about like mid-December, I think it was, when coffee was just going silly, those people were not buying and selling because they're looking at what's going, dead plants or diseases or whatever the case, whatever's going on. All they know is their margin is this, they're losing this, they got to get out. It's as simple as that. Nobody's thinking about fundamentals in that short-term situation. They're thinking about money. And I wouldn't say, like, I know people like to throw manipulation out there, that word. And I don't think it's that, because I can honestly tell you, most speculators lose money, not make money. Speculators will extend trends and make trends more volatile than they should have been. I will admit that 100%, but they're not interfering with the big fundamental picture. Eventually everything comes into line. And lastly, you can also say, like, I talk to a lot of farmers and ranchers, and so I talk to people on both sides of the debate. And you could say, if you want to be of the mindset that speculators are buying futures and manipulating prices, you could say that. And, it's something you can't prove one way or the other.
Right.
But you could also say, I've talked to corn farmers when corn was at $8 and they refused to sell. So we got, like, the market kept going higher because it was like a seller's strike. So you can get it for both sides. It doesn't have to 100%. Farmers can all try to, they're all playing the same game.
Yeah.
The saddest part is when you try to play those games on either side, it's a loser's. It never works out in the end. I can't tell you how many farmers I talked to, corn farmers that did not want to sell $8 corn. And now with corn at the end of last year, corn was in the threes,
Oh,
and they were like forced to sell because they were out of money. So don't get caught up in that. It's easy. It's hard not to because we're humans, but you have to try to play the middle. Try to keep your head on.
It sounds, from everything that I've been watching over the last 6 months, it sounds like emotion seems to be dominating everything.
Right.
Okay.
Okay. I'm glad
ahead.
you brought that up because I should have said this. Whether you're a producer watching prices go higher, which benefits you, or you're on the other side of it, it's easy to get greedy. Or what happens is the people have this mindset that the market's doing something to them. They are a victim. So if they're on the right side, they think they deserve it. I deserve this. I've worked so hard. I did all the right things. I deserve it. If you're on the wrong side, you feel like the market is punishing you, like it's evil. None of that is true. That's what we think because we're humans and that's how we are wired. But the reality is we can't control any of those things. All we can control is what we do and how we handle our business. So you have to try to take a step back and just know the market's not doing anything to you. You are doing it to yourself. It doesn't, after the fact, when you're feeling the pain, you don't want to hear that, but that's the reality. At any particular time, you can take action to hedge your risk or protect yourself or do what you need to do to avoid the tails on the two ends of it hitting you in the face.
The challenge there is, and there's going to be a lot of coffee farmers that are kind of screaming at their headphones right now because they don't have access to be able to do those kinds of things because it's so expensive to be able to hedge. It's completely out of their reach. It's also something that requires them to get very knowledgeable just to understand that they need. That's their insurance. And they feel kind of, the thing that they've constantly said to me is, we need to unhook ourselves from the futures market because this takes the power out of our hands to be able to sell our crops for what they're worth. And so there is a movement to be able to do that because they feel that there are people in other countries that benefit off what they do through buying and selling futures contracts. But that's a much bigger cultural, international, human problem than it is. The two things happen in the same place, but they're very different markets, if you know what I'm trying to say there. Do you know what I mean?
I do understand. A couple things I'll say. I will admit 100% it's harder to hedge something like coffee. And part of it's because of the exchange it's on. And I hate to say that, but it's true. So like the CME group lists micro futures, micro options, and it allows even the smallest farmer to easily hedge their price risk. So unfortunately, the exchange that coffee happens to be traded on, and it's nobody's fault, it's just reality, makes it a lot more difficult for smaller producers to access those types of tools. So I totally get that, and I can respect that. And I am not an expert on cash market coffee. That's your thing. But what I can say is I see this like on, for example, I deal with a lot of cattle ranchers, and what they do is their cattle, their inventory obviously fluctuates with the futures market, cattle futures, but a lot of them have decided to do like specialized, grass-fed, roaming, things like that. So it's a premium product. So they take their business away from what's going on in the cash market. It still impacts it, but because they have a premium service, it's a different price range. And so I would assume
we have specialty coffee, the specialty coffee market. So it would be based on the futures market with a differential.
Correct. Right. It'd probably be, I'm guessing with the cattle side, it's less volatile. You're still going to see the price swings, but it's not going to be quite
exactly
because your product is different. It's special. So, again, I'm not a farmer. I can imagine it's probably very difficult to do something like that. But
perfect. All right.
That's something you can control where you can't control market prices.
We are going to go into the next episode now. And for the next episode, folks, we're talking about how permanent these high prices are, because that's the question that I'm getting asked the most. Are the prices going up? Are the prices going down? Should I sell now? Should I sell my coffee now? Should I wait to sell my coffee? Should I buy coffee now? Should I wait until later this year? Etc., etc. So join us for the next episode. Peace, love, and peanut butter. Have an amazing rest of your day. I really hope you enjoyed this episode, friends. Please don't forget to show us some love by subscribing, liking, commenting, and most of all, sharing this podcast with your friends. Check the show notes for links, including our sponsors and our Patreon. And stay tuned for more great conversations on the Daily Coffee Pro by Mapper Forward.